Struggling with finding the right liquidity levels, you see lots of highs and lows but cannot determine which one to use. I got you. I'll show you some liquidity levels that are objective and always there for you to enter from every single day. If that's an issue that you're having, keep watching the video. This is Molham and let's get into it. Now, the problem that a lot of the ICT traders are having is not being able to spot the right liquidity level. So you see, what we're having here is this high, this high, this high, this high. So we're not sure which one to take. We have lots of lows. So not every high or low is gonna be swept. We could be actually breaking structure above one of those highs, or you could be displacing above. So, lots of highs and lows. It's totally okay to be confused. That's why I'm making this video, in order to clear all of the confusion here. And what we're going to be doing today is switching between the normal highs and lows to time-based highs and lows, or time-based liquidity levels. And what does that mean? So in any range of time, so let's say from this time to this time right here, and let's say we have, for example, 4 a.m., right? And then this is 4 a.m. So the range from 4 a.m. of the price action to the other 4 a.m., let's say we have something like this, right? The high, which is this one, and the lowest low, which is almost this one, the high and the low are the time-based liquidity. And why? Because this is the highest high, or the high of the range from this time to this time, and that's the low. So basically, we're going to be looking at specific times, a lot of different times. Those times we're going to be looking at the high of the range, the low of the range, and we're going to be only going with that. Now, one example is keeping it simple here. So looking at this price action here, or we're going to go to 1 minute, for example, right? So 1 minute, applying my indicator, and I already have a video about the timings, about everything about the indicator and the session timings. So you see, what we're having here is a lot of highs and lows, right? So inside of this range, from here, where it started from 20 all the way to midnight, we have this high, we have this high, all of those lows, a lot of lows that if you just take a look at all of those lows, you're going to be confused, and not all of those lows are going to be swept. However, if I just switch from looking at every high and low to looking at the session high and the session low, so all of this, the price action from here to here, that's nothing but the Asian kill zone.
Our sponsor, Blue Guardian, is the only prep firm that gives you a tool to protect yourself from hitting your max daily lows and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a prep firm that I trust. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation.
So from 20 all the way to midnight, that's the Asian. Where's the high of the range? That's the one right here. Where's the low of the range? That's the one here. So just by looking at those highs and lows of the range, so a previous session high or low, PXL and PX high, those are the liquidity levels that we're looking for. So X refers to either a session, day, week, month, also the 90-minute cycle. So every 90-minute cycle, we're going to go over that later on the video. So what we're having here, instead of looking at this high, for example, and then lose from it, and instead of looking at this one and then lose from it, or looking at all those highs and a lot of highs inside where you'll be confused, if we're just looking at this session high, where the reaction very nicely happened from here, and then the session lower price did not reach in this case, we're going to be clearing a lot of the confusion. Now, again, the same thing. We have New York session. The high of the New York session is a liquidity level, right? And then the low of the New York session is also a time-based liquidity level. And you see what happened here? So instead of looking at all those lows, we have a low here, a low here, a low here, low, 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 a lot of lows. If we just focus on the low of the session, we'll be clearing a lot of the confusion, and we're only going to be trading high probability condition and high probability liquidity levels. And you see here a very nice sniper entry going up. Now again, on the next day, right? So even on the next day, this is a New York previous high. What happened here today? at the current price action, and we actually took a trade here on the Discord, literally price sweeping that level, rejecting, right? So it happened over and over. And again, if we look at, for example, if we go to daily time frame, now we're switching from looking at the previous session high, previous session low, to previous day high and previous day low. So now the situation is a little bit different. Looking at this candle high, this is my previous day low, and this is my previous day high. What happened here is nothing but a sweep of that time-based liquidity going up from there. Now again, it happened again. This is previous day low, taken here, and price going up. What do we have? Another level is the previous day high, taken here, price reversing. Simply, I could go to the lower time frame, find an entry there. For example, if we go on the March 11th, right? So the sweep was right here, exactly here, and then another sweep to the lower side before price going up. But this move right here did not offer a fair value gap. This one actually offered a fair value gap. So liquidity sweep, time-based one, which is the previous day low, fair value gap, price respecting the fair value gap going up. Instead of paying attention to all of the highs and lows, we only pay attention to the time-based liquidity. Now, what is another time-based liquidity that we're having? This Asian low, sweep going up. What is another one that we're having? This London high, swept going lower. Very nice. And this also this previous New York session high taken. Very nice. And it's going to actually prevent you from overlooking at the liquidity levels. It's going to prevent you from, trading any high or low. A lot of highs and lows we're having on a price action range. So we only focus on the high probability one. Now also looking at what? So instead of just looking at the previous session high and low, we could enable this indicator, which is the 90-minute cycle. And now we have another liquidity to target. So for example, if I go to 3 minutes, now every 90-minute cycle has a liquidity. For example, this is Asia, which is the accumulation 90-minute cycle. What happened here? This low of the range is a liquidity level. And you see, we swept, we started going up. This Asia accumulation high is also a liquidity level. And you see what happened? I'm pretty sure that most of you guys are not using those time-based liquidity levels, the 90-minute cycle specifically. You see, sweep here, very nice. Price started going lower. Now again, what happened here? We have PM accumulation, very nice sweep to go up. What happened after? PM manipulation, swept going lower. Very nice, very nicely done. And also here, this is the New York reversal, swept going up. So we can even use the 90-minute cycle as time-based liquidity. This is from, for example, 15 to 1630. This is a liquidity level, the high of it and the low of the range. Now again, this is, for example, New York manipulation. So from 7:30 to 9 a.m., this is the manipulation. The high of it is a liquidity level. The low of it is a liquidity level. And you see the respect here, very nicely done. And you see again, liquidity taken going up. So again, instead of just looking at any high or low, we focus on those time-based. And a lot of the time, you see, this is how you predict the next 90-minute cycle. What's going to happen? So you see this one, we had the manipulation here on the London. We started going up. Because the London manipulation was going up, I'm expecting the next cycle to hold to the upside. So expecting this cycle to offer support for price to go up. And then this next cycle, we closed above it. Now I'm expecting this London 90-minute cycle to hold price up to go again. Now you see, this is always the case. New York AM going lower. Now I'm looking for this New York 90-minute cycle to offer what? Resistance for the next cycle. Now offer resistance, again, offer resistance going lower, offer resistance going lower. So that's the case. So we sometimes predict the next 90-minute cycle based on the previous one. Now after the liquidity sweep, use any type of entry, right? You could be using a fair value gap right here, fair value gap to enter from, or you could be using a change of state delivery or a market section shift with a breaker block, whatever you prefer. But the most important goal of this video is to actually make you spot those liquidity levels instead of just looking at any normal highs and lows. This was the video. Hopefully you guys find this valuable. It was just a quick video. Make sure to hit the like button, subscribe to the channel, and leave a comment. Also join the Discord. It's totally free. We do some live trading there as well as some seminars, educational ones. That's it for the video. I'll see you in the next one.